Hello guys, and welcome back to our channel. We're so excited to be here today. If you don't know us, I'm Paula.
I'm Vitor.
And we are Flourish.
Yes. In today's video, we're gonna talk about credit score. More specifically, what it is, what factors influence your credit score, how to improve your credit score, and much more. So stay tuned, already subscribe, share the video, thumbs up, smash this like button, and let's begin. Okay, let's first understand why should you care about your credit score. Well, basically it's because it affects your finances. How? Every time you apply for credit cards, loans, mortgage, things like that, financial institutions will check your credit report and score and decide if they will lend you money or not. Also, they will make the decision at what interest rate it will lend you money. So if you have a poor credit history or no history at all, it will be harder to you to get a credit card, get a car loan, mortgage, things like that, borrow money in general. It could also affect your ability to rent a house or an apartment or even get a job. On the other hand, if you have a great credit history, you can borrow money at a lower interest rate, and that can save you tons of money. So now that you understand why credit history report and score are important to you, let's understand the workflow, how it works in general. So your credit report will be created when you borrow money or apply for a credit for the first time. So you apply with the bank, for example, and this bank, who's the lender, will share information to the credit agencies or credit bureau. And these credit agencies, based on this shared information from the bank or any financial institution, will create your credit report, and based on this credit report, they will calculate your credit score. And from time to time, your credit report and score will be updated. And here in Canada, when I say credit agencies, I mean the two main ones, Equifax and TransUnion.
What information is shared in your credit report? Well, they will probably have all of your information and all of your history, but some of the information that they may have is
your social insurance number, your passport number, information in your accounts, like when you open them, how much you owe. They may also have information on your phone accounts and your internet accounts.
It is a very extensive list, so we're gonna leave a picture right here. You can pause the video and take a look and come back. And how long does this information stay in your credit report? Well, positive information can stay indefinitely. This could be things such as the type of loan that you have, the length of the loan, the initial amount of the loan, and all of the repayments history. And the negative information could stay for as long as 6 to 10 or even 14 years. Normally, any missed payments or accounts that were sent to collections would stay for 6 years. And bankruptcies and money that you owe due to a lawsuit could stay for as long as 10 to 14 years. And this is something that you should definitely keep in mind, because if you remember, like we said in the beginning, the credit report is what lenders use to determine if you're a good fit for them to lend money to you or not. And seeing that some information might stay for so long, you have to really evaluate if it's worth it or not. For example, I had a really I was struggling to pay off one of my credit cards, and I called and asked what are the options that I have, like if I were to close this account and not pay it because I can't afford to pay it, what would be the result? And then one of the things that they told me is, well, you could get code R9, I believe it was called, or R7, in your credit report, which means that I was bankrupt, and that would stay in my credit report for 7 years, and that would affect any future opportunities of me getting a credit card, a mortgage, financing a car, anything like that. So obviously I decided not to. I just paid it off, my credit card, and that was it, because imagine having a bad record for 7 years.
Okay, now that you learned about credit report, let's jump in credit score. So what is credit score? It's a 3-digit number that here in Canada ranks from 300 to 900, and basically tells how well you manage your credit and how risky you are to lend money to. Therefore, your credit score will influence whether you'll be accepted for a new credit or an increase in your credit, the interest rate charged when you borrow money, if you will get accepted for renting a house, and if you will be accepted for insurance. So, what is considered in your credit score calculation? And why did I make this question this way? Well, first, the credit agencies, they don't disclose the formula itself, so we don't know the weight of each factor, but they do share the factors that are considered or included in this formula, and they are, now it's the part that I read.
How long you have credit? How long each credit has been in your report? If you carry a balance on your credit cards? If you often miss payments? The amount of outstanding balance? If you're being close to or above your credit limit? The number of recent credit applications? The type of credit you are using? If your debts have been sent to a collection agency? And any record of insolvency or bankruptcy?
Now, it's important to keep in mind that it all depends on the lender, right? Because they will analyze if they will lend you money or not. So some lenders will be more attached to the credit score and others more attached to the reports, to the credit report. And some lenders will do the mix of both, because what can happen is like you have a really great credit score, but when they check your credit report, they will see that, for example, you declared bankruptcy a while ago, or you had debts a while ago, and for sure they would like to see this and consider if they will lend you the money or not.
And what would hurt your credit score? Well, there are a couple of things, but 3 of the things that would affect it the most are late payments, any accounts sent to collections, and bankruptcies. Other things that could hurt your credit score are your credit utilization. So, for example, if you use more than 35% of your available balance, regardless of how many credit cards or loans you have. Also, the length of your credit history. So, the longer, the better. So, for example, if you just started building your credit report, then your credit score will probably be lower. And lastly, credit card applications. So if you have too many credit cards or credit applications, it doesn't look that good, because it would seem as if you're seeking desperately for financial aid. And now, the part that probably all of you were waiting for. Tips on how to increase your credit score. Or tip number 1 would be the length of your credit history. The longer, the better. So start building your credit history as soon as possible, as soon as you turn 18, or as soon as you can get an account or a credit card, and keep it good, in good standing, which will be our tip number 2. Never miss a payment. Always pay on time, and if you can't pay the full balance, at least pay the minimum. Also, don't skip any payments even if they are on dispute. For example, if you receive your phone bill and you're not sure about the amount, you think you're being overcharged, and you called to ask, like, listen, what is this about? And they say, okay, we're going to investigate. But in that meantime, while they're investigating, the due date comes. Make sure that you pay the amount, even if you're not sure. It's better to be safe than sorry, and if they do owe you money, they will just pay you back or give you credit afterwards, which is better than having a late payment record on your credit report. Another tip is don't use more than 35% of your credit available. Just like we said earlier, they do not like it when you owe more than 35% here. So even if you have more than one credit card, which we do not advise that you have more than 2 or 3 credit cards max, you can add up all the balances of all 3, let's say, and don't use more than 35% of the total, because that would definitely hurt your score, even if you pay on time. Another thing that you could do if you really need to borrow more than 35% of your available credit is to get a higher limit, or try to get a higher limit, because that way it will be really hard for you to reach the 35% cap. So for example, we bank with Tangerine and our limits are $7,000. And it's really hard for us on a monthly basis to get to our 35% limit, which will be around $2,000. However, we don't suggest you do this if you're not comfortable with it, or if you have a hard time controlling yourself and spending your money wisely. Another tip is have different types of credit. So if you do need to borrow a lot of money, it would be better for you to have, for example, 2 credit cards and 1 line of credit rather than 5 credit cards. So that way, when the credit agencies are looking at your information, the way they would see is like, okay, this person doesn't owe, I don't know, $40,000 in credit cards, but he owes like $10,000 in credit cards and, I don't know, $10,000 in a line of credit. It's kind of balancing, or like diversifying your portfolio, to say that way. It just makes it look a little better than what it actually is. And our last tip would be to limit the number of credit applications. I know I said earlier that it is better to sort of diversify it and have many instead of just one huge bill. However, you have to keep in mind that every time you apply for credit, that hurts your credit score directly. So you want to limit that. And also, there is this thing that they call hard and soft hits. So hard hits are credit checks that appear in your credit report and do affect your credit score. And anybody who sees your credit report is going to see this. And this could be things such as application for credit cards, some rental applications, and some employment applications. Soft hits, on the other hand, are credit checks that only you can see and do not affect your credit score. This could be yourself requesting to check your credit report, or any businesses requesting your credit report just to update their records.
So that's it for today's video, guys. We hope you got the most out of it. And if you guys have any question about credit score, you can comment below. You can also comment
what's your credit score, out of curiosity.
If you don't know your credit score, we have 3 websites that you can check for free. And the first one will be Credit Karma, that they get the information, your credit report and credit score from TransUnion. The second one is Borwell. They get your information, credit report and credit score from Equifax. And the third one is called Mogu, and they just give you your credit score. There's no credit report, and they get your information from Equifax.
If you wanted your actual credit score and your credit report, you can request directly from TransUnion and Equifax. I think it's for free once a year, or one of them it's like once a month you get it for free. If not, then you have to pay as well. Like if you want it online, available immediately, you have to pay a fee.
Around $20.
Yeah. You don't want to pay, just get
Yeah.
just get a credit card from Borrowell and close enough.
Yeah.
So if you like this video, give it a thumbs up. Don't forget to subscribe, share with your friends, activate the notification bell so you don't miss any of our future videos. And
see you next time.
Dun-dun-dun-dun-dun-dun.
Ba-da, ba-ba-ba. Ba-da.